What's up, everybody? Happy New Year. It is Sunday, January the 2nd. I hope everybody had a wonderful holiday season, but the market's open tomorrow. So for those that don't know, I'm your wealth guy. Let's talk money. Let's talk my Sunday market predictions for all of 2022. Now, I have a heck of a lot of notes to go over and a bunch of stuff to talk about. So the first thing I want to talk about is you can almost expect fear to continue in this market. Now, we might get over the current fear issue, and I do believe that is going to be less and less, or have less and less of an impact over the next quarter. But I do believe that something else may come along, and that could be absolutely anything. It could be another variant. It can be some kind of economic crisis. It could be something like hackers causing a blackout across half the country. But overall, I still think there's going to be a lot of fear, or something that will trigger fear will come back into the market at some point after the first quarter. I really don't see anything happening first quarter. But let's take a look, because I have about 6 or 7 major points that I want to cover in terms of what I predict for the market for this year. So number one, we're going to talk about the Fed, interest rates, and tapering. Now, if you've been following me since I've been pretty well for at least the last year, I've been talking about no tapering whatsoever. And in fact, I still believe that there will be absolutely zero tapering. I really don't care what the Fed has to say. And I've said that over and over. I just don't care. There will be no tapering. Now, when we come to interest rates, maybe you'll get me a little bit more flexible there, because I will say that there is the possibility of an increase in interest rates. But even if it does happen, first of all, the markets are already factoring that in. So we've known for at least a few weeks that the Fed has been talking about increasing rates, and they've actually given, they're going to increase it 3 times, blah, blah, blah. It's not going to happen 3 times, most certainly, possibly once. And the truth of the matter is, regardless of what they do from an interest rate perspective, unless it's an extreme hike, which will absolutely not happen, it's not going to do anything to help curb any kind of inflation whatsoever. So even if it goes up a quarter point, which is the most likely scenario, you can expect that to already be factored into the market by the time that happens. B, a slight pull down in the market, but the reality is everyone's going to buy the dip and it's going to go right back up. Or C, they might not do it at all and might postpone it till later in the year, even though I think it's going to happen sooner than later, because they've got to test it and make the Fed look like they're trying to do something. But that's not really the intention of the Fed. Now let's talk about inflation, because I do think inflation is going to continue to go out of control. Right now, we're already seeing numbers like 6%, and I really don't think that's actually going to change at all. In fact, I think we're going to see an acceleration of inflation, and it's going to be primarily spurred on by crude. I think oil is going to absolutely skyrocket this year. And I think we're going to see food actually skyrocket. I think agro is going to skyrocket. I think all elements of food related, either at the retail level or through shipping, supply chain, we're going to have a lot of impacts to the grocery bill, and it's really going to hurt the average Joe's pocketbook directly. And the Fed's not going to do anything to curb that whatsoever. I think you can anticipate it. I think by the end of this year, it's going to be frightening at the level of inflation that we'll have, both in the US and here in Canada. But I also want to talk about the US dollar, because that does play an impact as well. So right now, the US dollar is showing some strength, but the strength is relative. You have to keep that in mind. It is a direct relationship to other currencies. And so, yes, it might be stronger than other currencies, but in fact, it's weaker every day, and that's because of inflation. And if we want to take a look at another element of inflation, let's compare that to the yield. So we know right now, if we take a look at, say, the 1-year yield, the 10-year yield, it's about 1.5%. The 30-year is almost 2%. Inflation, again, 6%, and I really do see that continuing to go. So the relative rate of inflation, or the yield, is actually negative by about 4%, if you really want to look at the 30-year. Now, I think that's going to continue to impact the market. I think we really need to watch that yield curve over the next couple quarters, I think, because I really feel that until we see a collapse in the debt market, the Dow, the markets in general will continue to run. And I'm going to stand behind that. I really do believe the markets will continue to run. Now let's have a look at volatility, because I think volatility is now my third point, is going to increase substantially this year. We are going to see longer wicks. For those of you who are traders and are watching the charts, we're going to see very significant wicks happening all over the place. I think the volatility levels are going to increase right through the roof. I think things like PE ratios, etc., those are all gone and out of the window. So anticipate higher levels of volatility, even though I think overall the markets are going to finish significantly higher than they are today. But let's talk about the economy now, because truth be told, regardless of what we heard, this is now the fourth point, the economy is going to continue to go down. Even though we've been hearing that the economy is improving and we've heard predictions that we might see a 3% increase in the GDP, I don't buy any of it. I really don't think the economy is improving. Not in Canada, not in the States, not abroad, not anywhere. The economies are going to continue to go down. Now, we might see numbers that seem better. So, for example, if we take a look at U.S. jobless claims, initial jobless claims, they've looked like they're better, but if it's only relative. If your prediction is ultra high and you still come in high but slightly better, it looks like the numbers are good and the economy is improving, but it's not, because the number is still absolutely atrocious. So I think you can anticipate to see that. Now, the way numbers are presented, bad news are going to continue to push the markets upwards. Again, another upward pushing momentum. I also think that you're going to see crude, which is the lifeblood of the market, I guess, for the lack of a better word, and at least of the military industrial complex, is going to continue to go up. And as oil goes up, it will continue to move the markets upward, giving the impression that the economy, again, is improving. But let's be honest, the economy and the markets really do not correlate at all anymore. My fifth point now, let's talk about precious metals and commodities. I've already touched on oil a couple of times here. Like I said, I do believe that oil is going to continue to go up. But gold and silver, I think I'm going to be very bullish on this one. I don't know if I'm going to see very much in the first two quarters, but definitely in the third quarter, I do believe we are going to start to see silver and gold start to move back upwards. They might not reach all-time highs, but they'll certainly be a little bit higher than they are right now. Although bullish, I am not euphorically bullish on it. So I don't think it's going to go, you're going to see gold at $3,000, maybe at $2,000, but definitely I don't think I'm going to see $3,000 gold. And most certainly I'm not going to say I'm going to see $30 or $35 silver, although I would love to see that happen. Now, JP Morgan has come out and said that they anticipate that the precious metal market will actually go negative to what they are today, and they're actually expecting precious metals to drop. Now, they are saying it's really going to be focused on gold and silver, whereas the rest of the metals and commodity markets are actually expected to go up. Now, I'm partial in agreement there. I do expect commodities to continue to run. However, I disagree with them wholeheartedly, and we know JP Morgan is a little bit questionable in terms of their actions and strategies relating to gold and silver. I think they're going to continue to be fined over and over for market manipulation of any kind, and they're just going to swallow that up and keep going. So gold and silver up, commodities definitely up. I expect uranium to actually be a major mover. I do expect lithium, copper, and all related new wave EV type strategies and holdings. I think all of those are going to see some wonderful returns this coming year. Now, the sixth one, and I've mentioned this over and over, is I do believe that at the end of this year, the markets are going to be higher. I'm going to say it. I believe the markets are going to be higher. Now, that's not to say that we may not see some hiccups along the way, even perhaps a quick market pullback, 10%, 15%, which I hope does happen, because that's actually very healthy for the market. But I think any dip right now is going to be an opportunity to buy in, because again, if the debt market doesn't crash, if oil doesn't crash, and if the Fed doesn't taper, the markets are going to continue to accelerate and go higher. I wouldn't put it out of the realm of possibility to see 42,000 on the Dow. Now, the last area I do want to focus on here, I know I do have a few minutes here. I know this is running almost 10 minutes, so it's far too long. Cryptocurrency. I am still quite bullish on cryptocurrency. I think they are still, aside from silver, the most undervalued asset class that there is. Now, that is far from a recommendation to buy. I think there's going to be opportunities. I do think that where the markets currently stand, there's no real momentum to the upside. A little bit of weakness still. However, that could very well change. Cryptocurrencies can flip on a dime, which we know. Bullish on cryptocurrencies. I do think there's going to be some opportunities to jump back in and buy at a better pricing than they're currently at now. I think the metaverse cryptos are really going to have a big push this year. But overall, cryptos, I think, are going to be a positive return on the year. So that's it, everybody. Those are my market predictions for 2022. I think every morning I'm going to continue to do my market previews as you watch through and as we start to kick up the recording and production levels and quality of these videos. But if you like what you see, feel free to subscribe, follow along. More than happy to continue. All right, everybody. I will see you next Sunday as I talk about my Sunday market preview for the week.